So I think if you look at in 2006, about 95% of all commercial real estate was financed by banks or the bond brief market, and about 6% was CMBS, roughly, if my numbers are correct. And if you look at the U.S., at that point in time, it was roughly about 23% insurance companies, 22% CMBS, and about somewhere around 55% was banks. So the bank market has definitely dominated in Europe historically, and in Europe in Europe it's dominated, and in the U.S. it's less so. So what's interesting about that is because there's this alternative financing source in the U.S., those markets came back a little bit quicker. And if you look at in Europe, because everything's been driven by the banks, anytime the banks get a cold or sniffle, then the whole market gets a cold. So realistically, the regulations have changed a lot, but also have helped. So if you look in 2011, this funding gap was quite significant. But then all of a sudden in January 2012, you saw LTRO come in, and that's really helped the banks a lot. So a couple trillion pumped into the banks. And then in the UK, we've had funding for lending, which is another regulatory incentive for the banks to continue lending. So we have to monitor how the impact of what the regulatory authorities are doing as well, and how they're providing financing to the banks, if you will, because that's impacting this desire for the alternative investors to come in. So previously we had a strong desire to come in because spreads were in the 200 range, and they went out to 400 range for an average 60% loan to value, especially in the UK. Now all of a sudden they're coming in again because a lot of this alternative financing is coming into the banks, and that's pressing down margins. So I think you're seeing some of the alternative lenders maybe not getting excited about the opportunity, which is bad for the market actually overall. So long term, it's not healthy. So we need to kind of incentivize the alternative lenders to get there, is my view, partially because I'm a little bit biased in that sense as well. So.